So it is related to the Reserve Bank of India and what is the role and what is the exchange control. So Reserve Bank of India itself is empowered under the Fema. So Reserve Bank of India is empowered to control and regulate the foreign exchange reserves and policy. So whatsoever rules and regulation, it is to be basically given and followed up by the Reserve Bank of India. And further, it is also having, Reserve Bank of India is also having the responsibility for maintaining the external value of the rupee. So in the FEMA, that is the Foreign Exchange Management Act, it succeeded the FERA, that is the Foreign Exchange Regulation Act 1973 in 1999. Okay, so it basically came effective from the 1st of June 2000, and further it has empowered the Reserve Bank of India so as to control and regulate the foreign exchange in India. And further, it is related to that the external value of the rupee is also to be maintained by the Reserve Bank of India. Now let us have a look at the objective of the FEMA. So FEMA is there so as to facilitate the external trade, so as to increase the external trade, and whatsoever the payments related to it to be done, it is also covered under the purview of the FEMA itself. And also it promotes the orderly development and maintenance of the foreign exchange market in India. So the main objective is related to increase the external trade, to manage the payments, and further to promote the external exports. Okay, that is basically related to that. And further it is related to FEMA regulations. So as per the section 11 subsection 1 of the FEMA, Reserve Bank of India is empowered to give any direction in this particular regard. So if any of the direction is to be given by the Reserve Bank of India, it is empowered under the section 11 subsection 1 of the FEMA that it can do so, that if it wants to basically desist something so as to be done under the FEMA, it is also empowered to do so. Okay, so the Reserve Bank of India, we can say, is the Karta Dharta under the FEMA, and it has been empowered under the FEMA under section 11 subsection 1. Under section 11 subsection 1, it has been empowered so as to regulate, so as to control, and further so as to issue guidelines related to that. Okay, then it is related to under section 11 subsection 3, RBI can also impose penalty. RBI can also impose penalty on the authorized person, which may extend to rupees 10,000 for contravention to any of the directions given by it. So if Reserve Bank of India has issued some directions, issued some guidelines or rules and regulations, and these guidelines are not being followed by the authorized person, if these guidelines are not being followed by the authorized person, in that case a penalty can be imposed which will be extended up to rupees 10,000 for contravention. And further, in the case of continuing contravention, that even after imposing the penalty, if it is contravened by the authorized person, in that case an additional penalty is to be paid, which can be extended up to rupees 2,000 per day for the period for which the contravention continues. Okay, so if Reserve Bank of India has imposed a penalty on the entity A over here, but it continues to do the same activity, that is basically contravening with the aspects of the directions given by the Reserve Bank of India itself, in that particular case Reserve Bank of India can impose a penalty of rupees 10,000 first of all, up to 10,000 first of all, and after that a daily penalty can be imposed on the entity itself, which can extend up to rupees 2,000 per day for the period for which the contravention continues. Okay, and further, any violation of the provisions of the act can be dealt under the civil law only. So if any person violates any of the provisions under the FEMA, it will be dealt under the civil law. Okay, then further, the data that is to be submitted to the Reserve Bank of India. So Reserve Bank of India, I already told you, is the Karta Dharta, and further it can issue the rules and regulations based upon that. And further, so as to regulate the export, so as to regulate the foreign exchange, so as to regulate the foreign exchange trade, Reserve Bank of India basically requires the data from the entities, and this data is to be received in the form of the different returns and the forms. So let us have a look at these particular returns and forms, and this particular topic is very, very important. So many times the questions have been asked from this particular topic itself. So first of all, it is related to the R return, which is basically for the data on the forex operations. So whatever the data related to the forex operations, it will be filed under the R return, and it is a fortnightly return. It is a fortnightly return which is to be submitted to the Reserve Bank of India. Then it is a BAL statement, that is a balances under the nostro vostro accounts. So whatsoever balances are there under the nostro vostro account, these are to be submitted, these are to be reported under the BEL statement. Then it is stat 5 statement, which basically in which basically the data is basically related to the transactions to FCNR bank account, so foreign currency non-resident bank account. So whatsoever transactions related to that, those would be reported under stat 5, and the transactions related to NRE and NRO deposit accounts, those would be reflecting there in stat 8 stat 8 return, which is submitted to the Reserve Bank of India. Then it is NRDCSR, so consolidated data on non-resident deposit account. So it is consolidated data on non-resident deposit account. So let me explain them to you again. So first of all, it is related to the R return, which is related to the forex operations return, and it is a fortnightly return. Then it is a balance statement, that is BAL statement. So it is basically reflecting the balances under the nostro and vostro account. Stat 5 is related to the transactions related to FCNRB, and stat 8 is related to the transactions under the NRE and NRO deposit account. And further, NRDCSR is a consolidated report. It is a consolidated report related to the non-resident deposit accounts. Okay. Then it is IBS, that is International Banking Statistics. So it is a quarterly data on international assets and liabilities. So whatsoever assets and liabilities are there, and this is a quarterly statement which is to be submitted. Then it is a statement of remittances sent under the LRS. So whatsoever remittances have been made under the LRS scheme, so we will be reading about that particular scheme also, that is a LRS, that is a liberalized remittance scheme. Okay, so whatsoever transactions have been done under the LRS scheme, those are to be reported under the settlement of remittances. And then it is related to statement of not settlement, it is statement of remittances. Next, it is related to the statement of the trade credit. Okay, so whatsoever transactions are related to the buyer's credit or supplier's credit, and that those all transactions would be reported to the Reserve Bank of India on monthly basis. The R return is on fortnightly basis, and further IBS is on quarterly basis. Statement of remittance is monthly basis. Statement of trade credit is monthly basis. XOS statement is half yearly statement. It is a half yearly statement, and it basically related to the exports outstanding statements. So X is basically for the exports and OS is for the outstanding balances. So export outstanding statement, and it will be showing all the overdue export bills which are remained unrealized. So if the bills have been drawn by the exporters, and further these are drawn on the importers on overseas countries, when these were presented, the payments were not made, so these become overdue. So a statement is to be submitted to the Reserve Bank of India in the form of the XOS statement, which is half yearly statement, which is to be submitted to the Reserve Bank of India. Okay, then it is related to the BEF statement. So BEF statement is related to showing details of the imports where remittances have been affected. So where the remittances have been made, where the import is there, it is basically related to what? It is related to the imports. So where the imports are there, and further the amounts have been remitted, but there are no actual imports, but the actual proof of the imports were not submitted by the remitter, by the importer itself. That is also to be submitted to the Reserve Bank of India in the form of the BEF statement, in the form of the BEF statement. Then it is FAMIS. FAMIS is what? FAMIS is daily data on the foreign exchange dealing room operations. So whatsoever deals have been executed by the dealing room itself, those data is to be submitted to the Reserve Bank of India on daily basis. So FAMIS is daily report, BEF XOS is half yearly report, the statement of trade credit, statement of remittances is monthly report, IBS is quarterly report, whereas the report first of all that we covered, that was related to what? That was related to R return, that is a fortnightly report. Okay, so you must be remembering the names of these returns which are submitted to the Reserve Bank of India, and we must also be remembering that what is the frequency of these particular reports. Okay, then it is related to the capital account transaction and the current account transactions. We have already covered this particular part, but let me explain to you these again. So what is a capital account transaction? So all those transactions which alter the assets and liabilities. Let us take the first case where a person is resident over here in India, whereas a person is resident over here in India, and a transaction was made by the person which is altering the assets and liabilities, which are altering the assets or liabilities, including the contingent liabilities. So contingent liabilities are those liabilities which are not yet due but can be crystallized in the near future. Okay, so those are the contingent liabilities. So one transaction that alters the assets and liabilities outside India of a person, or assets or liability of a person. So first case we are considering right now. So that is a case that says a transaction that can alter the assets and liabilities, including the contingent liability, outside India, a person who is resident here in India. So if a transaction was made and basically it is altering the position of the capital position of the transaction holder over there. Okay, that is basically what that is capital transaction, and also the vice versa. What it means, if a person who is resident outside India and a transaction is altering the position of the assets or liabilities in itself in India, that is also a capital account transaction. Like if we say person A over here in India has purchased a house over here in overseas, that is what, that is basically a capital account transaction. So if he has remitted the amount for the same cause, that will account for what? That will account for the capital account transaction. Same way, if a NRI person over here who was resident outside India has now purchased a property over in India, that would be what? That would be a capital account transactions. And other than that, all of the type of the transactions which are not capital in nature, those will be what? Those will be current account transactions. So if you have remitted any of the amounts for traveling abroad, if you have remitted any of the amount for the medical facility, for facilitating your family, or for gift purposes, or if there is a small amount, small transaction amount which is basically related to your business, that all transactions would be covered under what transactions? Those all will be covered under the current account transaction, because there is no change in the capital asset or liability. Okay, so if you need to understand one point, if any transaction is changing the capital account transaction, is changing the capital assets, that is basically capital assets or liabilities, that would be a capital account transactions. Other than that, all the transactions would be related to what? Those all transactions would be related to the current account transactions. Okay, now let me give an example related to what type of the transactions would be covered under the current account transactions. So payment due in connection with the foreign trade. So if there was a payment due in the connection of the foreign trade, it may be the case that you must have imported something or you must have exported something, and a payment was due, that you received the amount or either you paid the amount. In both the cases, that would be related to the current account transaction. And also payments due as interest on loans or as net income from the investment. It may be the case that you must have received an income on your investment, that is also a current account transaction. It may be the case that there is an interest payment due on your loan that you have taken from the overseas bank or institution, that will account to current account transaction. Then it is related to the remittances for living expenses. It may be the case that so as to support your family, so as to support your parents, spouse, and the children residing abroad, you have made some remittance, that is also covered under the current account transaction.